Paul, Pfizer is absolutely one of it's not even absolute. It's absolutely our most popular video we've ever done. Is we analyze Pfizer right when all of this hit, and I think Pfizer must have had the first news coming out of a vaccine. Paul, you and I doing that video, we were somewhat hesitant many months ago about doing it, and sure enough, it became what is now our most popular video. So Mo, give us some insight on why that's our most popular video that we've ever made.
I think it was because they were the first, they were the biggest. You know, there was a lot of small companies that came in and tried to do vaccines because everybody was getting money from the government, so it made sense. And Pfizer has always been known, and still are, as the virus drug company of the world. Anytime there's a virus, it's Pfizer. So it's not surprising that Pfizer was the first one to come out with a vaccine for the coronavirus, and they did it very efficiently.
On December 11th, 2020, they came out with the vaccine. They had positive tests, clinical trials. It was 95% more effective than placebo at preventing systematic diseases. And so they've been sort of the leader. I just got the Pfizer, and it took me down for a day, but here I am. I'm back. The beard's looking flawless. I cut my own hair. Mo, you know I cut my own hair.
I was going to say before the show when you were sitting right there, I was like, your hair looks really, no, it looks really good.
Well, I cut it myself.
You were a little flustered, so I didn't want to talk to you.
Yeah, thanks for that. So Paul, let's take a deep breath, a moment of likeness for our OG followers. I love you. And let's look at Pfizer from an 8-pillar perspective, the fundamentals behind this company and the stock price. Go ahead, my friend. What is the market cap for Pfizer?
$200 billion. Okay. The PE, 21. That's an X. And the profit margin is 23%. That's a check mark. Okay, good. So it seems a little pricey from the PE standpoint, but very healthy margins, which most drug companies do. Almost 80% in the gross margin and bottom line of 23%. They have a very healthy dividend, 4.15%.
Wow.
Which eats up $8.46 billion of their free cash flow.
So in comparison, Johnson & Johnson's market cap was $425. And with a 2.5% dividend, this is 4.15% dividend, you said, Paul?
Yes, 4.15%.
All right, let's hit up pillar number 3, which is revenue growth, baby.
52.8 billion down to 42 billion. X. This is interesting. Why did that happen?
Right? When's the last reporting data you have up there? Is it December of last year?
December of 2020.
Okay.
7.2 billion in profit versus 9.6. Check mark there.
So that's up. Okay, profit growth. Pillar number 4 is looking good. Shares.
Why is the revenue down so much? Can anybody tell us? Because it wasn't the way it was with, well, Johnson & Johnson does more everyday products too. Shares outstanding.
Yeah, pillar number 5. Go ahead, Paul.
6.07 down to 5.56. Check mark there.
Okay, how about current assets over current liabilities is pillar number 6.
47.74 versus 34.15. Check mark there.
Very nice. Free cash flow growth is pillar number 8. Now,
remember everybody.
Go ahead, Paul. I know where you're going with this.
Free cash flow. What do we use? Why is free cash flow important? Earnings can be manipulated a lot easier than free cash flow. Free cash flow is cash from operations less capital expenditures. I'm going to repeat that till the day I die because it's more important to me to look at free cash flow than earnings. It's the cash in and cash out of the actual operations of the business. They have to reinvest back in the business and their capital expenditures. You use free cash flow to buy back shares, pay dividends, make acquisitions, pay down debt. These are important aspects of understanding the more free cash flow business have, the more options they have, right? So what I did is I added a line, as I've told you guys before, I've added a line to our statement that gives us the free cash flow. Last 5 years, 13.16 down to 10.3, that's an X, with an average of 12.8. Now, 12.8 times 20 is 240 and 16, 256 billion. What was the
200 billion is their actual market cap.
Okay.
Hold on a minute now.
So they're selling for about 16 times free cash flow in the last 5 years. Now, I will say this. Here's what I don't like, Uncle Seth.
Go back to that dividend. Can they afford it, Paul?
That's the other thing. Their dividend was 8.4 billion. That's a big chunk of your free cash flow.
8.4 billion.
That dividend
is 2/3 of their free cash flow. And with such a high yield, they might want to save money at some time in the future and say, you know what, we want to pay down debt, we want to do this. let's go save some money, not pay such a big dividend. Because look at all the other drug companies, they don't pay huge dividends. I don't know what the actual number is. When they cut it in half, they're going to save $4.2 billion in cash every year and still offer a 2% dividend, which is higher than the market does right now.
Bogdan, super shorting Bogdan in the Bid and Ask Nation is asking, why do we do a 20 multiple here for pillar number 8? The growth is slowing down, Paul. Great question.
So that's what I was going to, so that was my next comment.
Go ahead.
Here's the deal, Bogdan. Look at the free cash. This is what I was saying, getting you, Seth. 10 years ago, 19.6 billion. 15.5, 13.5, 10.3. I don't like the direction of this free cash flow. So for me personally, you have to do research on the company further to see what are they doing to increase their free cash flow. But I don't like the direction it's going. What is their pipeline? What are they doing to get, I mean,
Michael's saying they have 35 drugs in phase 2 pipeline.
Oh, wow, that's good. Now, this free cash flow number, man, if I was the CEO of Pfizer and I didn't care about where the stock price went, because I know the stock price can go up and down whimsically, I'd probably cut this dividend, use that free cash flow to buy back more shares or make more acquisitions of other rights to other drugs. We look at this saying, what do I want to pay for Pfizer? Guys, I hate to say it, I would want to be at like single-digit free cash flow, because I don't see, if I'm just buying it without doing much more research to understand the future of their profit, all I see is that their free cash flow has dropped in half in the last 10 years. You know, if they were at $20 billion in free cash flow, paying an $8.4 billion dividend payment every year, okay, 40% of it, not bad. But 2/3 of their money right now is going out to dividends. With everything going on, I don't know. What do you think, Mo? If a gun's to my head saying pick a price right now.
What's your price?
Let's see here. Gun to my head, pick a price right this very second.
I have my price in.
Per share?
Yeah. Go ahead.
Sub 25.
My number was 20.
It's currently $37, Pfizer is, and it went sub 25 not during the crash, Paul, of last year. Final take on Pfizer, Paul. You're looking at that thing for the drop a long time, right?
Yep.
Yeah.
And Nicholas had a good question. What could trigger a crash? We don't know.
We don't know.
Guys, the analogy that John Hussman gives is if you're in a room with a fireplace and the room is filled with gasoline, you don't know which spark exactly will cause the room to explode, but one of the sparks will. The example I always give is about divorces. The last fight you have before divorce isn't the reason you guys got divorced. It was just the final trigger of, you know what are we doing here? This is crazy. We shouldn't be together anymore. Same thing. What are we doing here? Stocks are overpriced. These should be a lot lower. That's essentially what happens. So whenever I hear people, it's amazing to me that I always hear people say, what would cause stocks to crash? But they don't ask, why are stocks going up like crazy?
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.